Yo, what's up everyone? Last week in one of the videos I talked about dollar cost averaging and I talk about different DCA strategies. You can check the video here or here. And in one of these strategies I talk about starting to DCA dollar cost averaging when the moving average 50 goes below the moving average 200. And one of my subscribers asked, but what is a moving average and how to get these moving averages into a chart? So without further ado, let's talk about moving averages and how they can help you to spot the bull market or a bear market. All right, so I like to use TradingView. You can use TradingView.com. It's a free tool to look at charts and do technical analysis. Personally, I don't do much technical analysis, but sometimes it's good to use a couple of indicators. And you can go and click here and choose whatever is the asset that you want to look at. Let's look at ETH, Ethereum. And I'm going to choose here Ethereum Tether US. And basically we have the Ethereum chart, the daily Ethereum chart, meaning that each of these candles represents one day. Okay, and now to add these moving averages, I'm going to click here indicators, and I could type moving average or something like that. But in this case, I actually have already favorited here the indicator that I want to use. You can search many other indicators, RSI, MACD, and many others, but I'm going to choose here the moving average cross 50 and 200. Okay, so now we have these moving averages applied to the chart. But what does it mean, a moving average? So moving average 200 represents the average price of the previous 200 days. So if at the moment, for example, the moving average 200 in Bitcoin at the day of today is $2,088, means that the last 200 days average price is $2,088. If we come here to this day, for example, this is 21st of February, the average 200 days price on Bitcoin would be 3,500 approximately. So basically, this moving average 200 represents the average price of the previous 200 days. And because we are talking about 200 days, it's, let's say, a slow line. You can see here that is somehow slow. It takes time to react, right? The market started to drop here, and it takes time for this line to start dropping also. However, we have a line that moves much faster. We have here the moving average 50, which is the average of the previous 50 days. And this is basically a great indicator to understand if we are in the bear market or in the bull market. If I go back here, we can see, for example, that in May 2020, the moving average 50 goes above the moving average 200. Remember, the moving average 50 is the red line and the 200 is the green line. Goes up, and we have a big, long bull market here. And then when the moving average 50 goes below the moving average 200, we can consider that we are in a bear market, and this is what happens here. And according to the best strategy of dollar cost averaging that I talk about in the other video, the best strategy that you could chase is to start buying more aggressively, dollar cost averaging, buying a little bit every week or every day, whatever is the asset. In this case, we are looking at the Ethereum chart, but it could be Bitcoin or whatever. And you start doing these DCA dollar cost averaging once the moving average 50 goes below the moving average 200. And this is a great indicator to understand if this asset is cheaper or more expensive, to understand if we are in a bear market or in a bull market. Now, a lot of people also use these moving averages crossing to understand if this is a buy signal or a sell signal. So some people will see this moving average 50 going below the moving average 200 as time to sell. But personally, I don't like to time the market. I see this more as an indicator to tell me that we are now in a cheaper area. We are in a bear market, and it's in bear markets that people get rich, right? It's not buying at the top. It's not buying Ether when Ether is $4,000 that you are going to get rich, right? But it's in the bear market if you have a long-term vision and if you plan to hold Ethereum in the long term, this is the best phase to start buying dollar cost averaging. You need to dollar cost average because we never know when the bottom is hitting the bottom. As long as you consistently buy when Ether is cheaper, in the long term, you will do fine. Not financial advice, by the way. This is just a personal experience of a very humble man. All right, guys, I hope this was clear. Now, let me show you another DCA cheat sheet that can really help you with your dollar cost averaging strategies. So I discovered this indicator here. If you go to TradingView and search for DCA cheat sheet, you have this indicator here, which is really cool. And it basically combines different moving averages with RSI to give you these green areas. And basically, according to the indicator, when the green is more bright is when you should do aggressive dollar cost averaging. And when the green is less green, you should continue to do some dollar cost averaging. But basically, what this is telling you is that you should have done aggressive dollar cost averaging when Ether was around 1,100. And now that is 1,700, you should continue to do some dollar cost averaging. This is a very cool indicator just to give you a kind of a visualization when you should be buying. This indicator basically also told you to do aggressive dollar cost averaging when Ethereum was around $200 here. And actually, if you have done this, I guess you'll be doing very well at the moment. All right, I'm sure these indicators were useful. And if you find them useful, give it a like and subscribe to the channel. It will really help with the YouTube algorithm. And as always, I'll see you tomorrow.